Welcome back, guys. In this section we're going to be talking a bit more about candlesticks. We're going to be discussing on what makes up a candlestick. What is a candlestick chart? We're going to elaborate further on the structure of the candlesticks and some of the key factors that you have to put into consideration when it comes to candlestick charts. In this section, we'll explore the art of reading candlestick charts properly and explore how to understand them so that they can assist you in your forex trading. This section will provide traders with an explanation of what candlestick charts are, what they represent in currency trading, the structure of candlestick charts, and a detailed breakdown of how to read candlestick charts. As you can see, I've got an illustration of a candlestick chart of the currency pair USD CAD, and this is a 1 hour time frame candlestick chart. What is a candlestick chart? There are a lot of different forex charts. However, there's a specific type which traders around the globe find useful, and this is the candlestick chart. What do they represent? A candlestick chart is a financial chart that is applied in order to describe the price moves of a currency, a security, or a commodity, with the ability of being able to be used in various time frames. The candlestick represents 4 key pieces of information for the time frame in question, and these are the open, the close, as well as the high and the low. It goes without saying that forex candlestick charts are frequently utilized in the technical analysis of currency price patterns. Let's begin with a short history of candlesticks. The Japanese first started using technical analysis in order to trade rice in the 17th century. So candlesticks have been around for a while. Whilst this early version of technical analysis was comparatively different from the US version initiated by the pioneer of American technical analysis, Charles Dow, back in 1900. Most of the guiding principles were very much alike. What is a candlestick chart? Let's outline some crucial facts to give you a basic idea. The what, which is the meaning of price action, is more significant than the why, i.e. Most of the fundamentals, be it earnings, news, or any fundamentals, they all represent all the present and available information is reflected within the price. Sellers and buyers actually move markets based on anticipation and emotions such as fear and greed. Market tends to fluctuate. The real price might not reflect the underlying value. Steve Nyson, who introduced candlestick to the Western world, outlined that so-called candlestick charting first came to light sometime after 1850. A considerable amount of credit for the development of candlestick and charting goes to a legendary rice trader who was known under the name Homer from Sakata town. It is most likely that his innovative ideas were consequently modified and then refined over many years of trading, ultimately resulting in the system or model of candlestick charting that we encounter every day as forex traders. So on your On my right, you can see I've got an illustration of a bullish and a bearish candlestick structure. We are going to discuss this now in the next section. So, what comprises a candlestick? Mainly, there's 4 criteria that you need to take note of. Actually, I would say 5. So we've got the open. For a bullish candle, we've got what we call the open. And mostly, a bullish candle is represented by a green solid candlestick with either 2 long or short wicks at both sides. So we've got the open. For a bullish candle, the open, that's the price when the price that is formed when the candle opens. There's like the initial price. Say we are on a daily candle. When the day is finished, a new candle is gonna open. So the price which that candle opens at, that's the open price. Then we've got the closing price. This is the price at the end of the day. That is if you are reading a daily candlestick chart. So the close only comes at the end of the day. Then we've got the body. The body, this represents the price range between the open and the close of that time frame trading. So this is the body of the candle. Then we've got the high. This represents the highest price point reached during the time frame of that candle. So the high represents the highest price point that was reached during the trading session of that candlestick. Then we've got the upper wick. This represents the extended price action above the candle's body. The length of the wick indicates the high and the low price points for that time frame. We also have the low, which represents the lowest price point reached during the time frame of that candle. And then we've got the lower wick. This represents the extended price action below the candle's body. The length of the wick indicates the low price points for that time frame. Now looking at a bearish candle, we also have the open. In this instance, the open of a bearish candle is from the upside because we're anticipating price to move to the downside. So the opening price is from the top. Then we've got the close, the body. This represents the price range between the open and the close of that time frame. And then we've got the close. This represents the closing price of the candle at the time of the candle's close. Then we've got the high. The high represents the highest price point reached during the time frame of that candle. In this case, the bearish candle. Then we've got the low. This represents the lowest price point reached during the time frame of that candle. Then we've got the upper wick. The upper wick represents the extended price action above the candle's body. The length of the wick indicates the high price point for that time frame. Then we've got the lower wick. The lower wick represents the extended price action below the candle's body. The length of the wick indicates the low price point for that price for that time frame of the candle. What do candlestick charts represent in currency trading? As specified earlier, candlesticks are a way of presenting the price action over an estimated and established period of time. Moreover, they can provide useful information like the market sentiment or possible reversals in the selected markets by demonstrating the price move in a particular manner. Understanding this is a good starting point in terms of how to use candlestick charts in trading. When you trade something, especially Forex, you will apply price charts to observe price moves in the markets. If we compare line charts and candlestick charts, for example, you will see some vivid distinctions. The line chart is a very easy method of demonstrating price movement. It displays information with a simple line using a series of data points. It is the kind of the chart that you might be used to seeing in different magazines and newspapers, which present the price motion of stocks and shares. By understanding candlestick charts, one should know that they represent price movement, though they are made up not with a simple line, but with individual candlesticks. Forex traders tend to prefer to read candlestick charts owing to the fact that they include considerably more information compared with the line chart, and can be much more useful when making prudent trading decisions. A line chart is uncomplicated and shows price moves within a line, whilst candlestick charts present more information with each individual candlestick. At the beginning of this section, we mentioned that candlestick charts are used in various time frames. Technically, if we set the candlestick chart to a 30-minute time period, each candle will actually form over 30 minutes. Similarly, if the chart is established in a 15-minute time period, then every candle will take 15 minutes to form. So what are the key factors that you have to take note of? Number 1, candlestick charts are used by traders to determine possible price movement based on past patterns. Candlesticks are useful when trading as they show 4 important price points, and that's the open, the close, the high, and the low, throughout the period of the time the trader specify. So this can be 1 minute candlestick chart all the way to a monthly chart. Many algorithms are based on the same price information shown in candlestick charts. Trading is often dictated by emotion, which can be read in a candlestick chart. So do candlesticks work across all time frames? Yes, they should work in all time frames because the market dynamic behind its construction is the same in higher charts than in lower ones. However, someone using a very short time frame like the 1 or 5 minute chart should be forewarned that there is more noise in small time frame, and that the opening and closing prices of these candlesticks aren't as important as they are on a daily chart. So you'll find out as further we go deeper into price action, I'll be advising people to look at monthly, weekly, daily time frames to determine directional bias, because a higher time frame momentum always takes precedence than a lower time frame momentum. So if monthly, weekly, and daily they are showing bearish momentum, if you go down to say 15-30 minutes, you might see short-term bullish movement, but probably at the end of the day or end of the week or end of the month, the bearish momentum would have taken precedence. So in conclusion, as you can see, candlestick charts can really help with trading process. They are very comfortable structure to work with, and you shouldn't have any difficulties in applying them on a daily basis. How do you interpret candlestick charts? Simple. An ordinary candlestick can show you much more information than a line chart, as you have all the necessary price information displayed, even the bullishness and the bearishness of the market. So I urge you all to study further, investigate more about candlesticks, utilize channels like YouTube, Google, research more regarding on how to read candlestick, how to interpret them. There is a lot of price patterns that are formed from candlesticks, of which we are not going to cover those in this beginner's guide. That's for the advanced course. So I urge you to research more when it comes to candlestick patterns, so that by the time you enroll for the advanced course, you have a better understanding. So I'm going to see you again in the next section of the course, and I wish you all good luck and happy trading. Thank you.